Yo, yo, yo. Hey, happy Wednesday. Hey, last Wednesday, we did our first watch party. Then on Friday, we did a second watch party. We got another watch party today. It's in 2 hours and 39 minutes. Don't forget, put it down on your calendar. And I'm going to teach you how to run a commercial bank. Yeah, we're going to study the balance sheet management for a commercial bank. Therefore, we can then start discussing how to run a central bank, right? Makes total sense. InvestorBootcamp.com is where you go for that. And then click here. Pay what you want, by the way. Anything you want is fine. Whatever you think. Cool. So we're about to do some fast and furious Forex. We're going to cover gold and oil and Bitcoin and treasuries and the stock market, euro dollar, and then we're going to do a viewer's choice. So let's go. Let me remind you, trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Let's get warmed up by going to our headline radars to cover, well, headline news that just came out over the last few minutes.
Euro, U.S. dollar price forecast. Sellers take the lead amid U.S. political and fiscal noise.
Euro, yen. Range bound as focus turns to Eurozone sentiment and Japan's CPI. It sounds
Oil
sleepy.
prices edge higher. Secondary India tariffs in focus. Fed's Williams. Economy is going through an adjustment process.
U.S. stocks may lack direction ahead of NVIDIA earnings. Vantier launches to transform prop trading with transparency and trust. Oil steadies as investors focus on Ukraine, inventories and tariffs on India.
Futures suggest Wall Street to open moderately up. Euro falls amid political uncertainty.
New York Fed Pres Williams on CNBC, Fed's independence is very important. Quite right. All right, so monthly CPI out of Australia, 2.8. That's a huge shocker. That's a jump from 1.9 to 2.8. Hey, that kind of stuff just doesn't happen. But it happened. Yeah. What's on the calendar for today? Nothing. Tomorrow, claims, and then GDP. Friday, PCE. Yeah. Tonight, though, NVIDIA at the market close. Yeah. So let's do our macro review. Let's get our satellites aligned properly. It's where we want to kind of look at everything to gauge, well, is it risk on or is it risk off today? Should you be a buyer of risk or seller of risk? Well, for that, you want to look at kind of everything, and I'll give you a little cheat sheet. Usually I don't do this, but I'll give you a little cheat sheet today. Why? Because I'm a nice guy. All right, so 10-year T-note, 4.29. Not quite going in the right direction. Oil trying to stabilize, fine, but it should be lower. Gold trying to go up, but it ain't. S&P 500 had a rough day, but had a big rally at the end. Is it clear that it's going to continue up from here? No, it's not. Dollar basically flat. We've been at 98, 99 for a long time. And Bitcoin, yeah, well, we've been here a while. It says up. Yeah, up now. It was 109. Now it's 111. But if you go back a while, like a week, we were probably at 111. Here's our hit list, everything that you should be looking at from a bullish point of view on the macro score. Just realize some of them are technically not doing that. Hey, that's normal, huh? That's normal this time of year. Okay, same thing over here. There's lots of bearish stuff, but not everything is falling. Once again, that's not abnormal. Long-term macro, short-term technical, and then basically monthly and quarterly seasonality. Sometimes I line up. In this case, these ones don't, so stay away from those ones. You might have a chance later. Now, the cheat sheet I want to show you has to do with risk. And the way that we measure risk here is we look at 3 different time frames: short-term, medium-term, long-term, daily, weekly, monthly. And we look at the options market, volatility, long-term treasuries, the stock market, the dollar, gold, the yen, short-term treasuries. And then we correlate them, put them all together, and guess what's happening? Nothing. So if you're trading like it's just another regular day, you're disconnected from reality. And is that an important thing to know? I think so. Right, Jay? Jay thinks so too, I think. All right, so now we're going to go through our Fast and Furious, and we're going to look at technical patterns that may or may not exist on 15-minute, 30-minute, hourly, 4-hour, and daily charts. I'm only going to look for trending patterns, which are up, down, or sideways, or a reversal of the up, down. I don't think you can reverse a sideways trading pattern, but whatever. Okay? And so this might take you a long time to go through all your charts and go through all time frames and then try to see if any opportunities are worthy of your attention. Okay? So this might take you an hour a day, 2 hours a day. And, well, it should, right? It shouldn't. You don't have that kind of time to waste. You can make more money, but you can't make more time. So analyzing all those patterns on all those time frames, no pattern exists on Forex. No up pattern, no down pattern, no sideways pattern, no reversal pattern like head and shoulders or 1, 2, 3s or Gartley's, no bats, no butterflies, nothing. So you may be trading a mirage if you're trading euro dollar at the moment. Now, dollar seems to be strong. Yeah. But it doesn't mean there's a reliable, repeatable pattern. What about Bitcoin? There's all your reliable, repeatable patterns on Bitcoin. You're Wayne, like, I don't see anything. Yeah, that's right. That's a good radar. No opportunity. Only threats. Well, what about the treasury market? What does that tell us about our risk on, risk off sentiment right now? Well, we have patterns on the 4-hour and daily, both say up in price, so down in yield, and that's good. That leans toward risk on. I know it probably takes you longer to go through all these markets, but I don't have time to waste. I need low noise, high action in my trading. So I need to know what to focus on right here, right now. So before you do the right here, right now, you have to know what you want to do. So with gold, we're fundamentally bullish. Why? I don't know. That's just how it is. We have 15 or 20 things we look at, and it suggests more likely up than down. Good. So then I go to my technical patterns, my technical radars, and say, are there any bullish patterns that would be congruent to my fundamental bias? That's how that works. Isn't that cool? Makes sense, right? Yeah, there's 2 things. They're both on the hourly chart. We have an up channel with an opportunity, so that's good. And then a C to a D. Okay, great. There might be an opportunity in gold. It's okay to be bullish. That's strength. It shows signs of strength, or the pattern itself is strength. And we're at the bottom of the channel trying to work our way up, so that's an opportunity. Lovely, right? Now, of course, I could do this a lot faster if I didn't have to explain things. So imagine your whole morning routine before you even go to your charts is to check all the fundamentals, get an update on the news, and then go look at the opportunities and pattern recognition. And all of that just takes you, I don't know, a couple of minutes. And then you go to your charts informed with intent. You're not looking for something to do. You're analyzing the charts to say, is this the right time and the right price to execute my strategy? Versus, what does MACD say? Should I buy it? Should I sell it? Well, that's ridiculous. S&P 500, daily bullish. We're right in the middle of the range. We're riding the moving average. We're not on the support. We're not on the resistance. So it does show strength, and we're still inside of an opportunity. So we had the big up, the down, buy, roll reversal, and now we just wait. Is it for NVIDIA later today? Maybe. Is it GDP tomorrow? Maybe. Is it PCE on Friday? Probably. What about jobs coming up next week? Could be a lot of things. So it's a big, giant, fat maybe. So maybe go check it out. Put it on your to-do list. Go check it out. Cool. So what do you want to do? Viewer's choice. Viewer's choice. What do you want me to do next? What asset? Is it a currency pair? Is it one of the crypto? Is it individual stocks? Do you want me to do NVIDIA? Yeah, I can do this for NVIDIA. What about commodities? You want silver? You want Brent? You want WTI? Other stock indices? ASX, DAX, Dow, FTSE, NASI? You want to do NASI? Nikkei? What do you want? Talk to me, Goose. I'll put on all patterns. What do you guys want to talk about? 5, 4, 3, 2. If you don't pick something, I'm going to do NVIDIA. 1. All right. I can't stand the delay on YouTube, so I'll just go ahead and do it. And we want to look at not the 10-year. I want to get rid of 10-year T-note. Okay, NVIDIA right now shows an up channel. You got a heads up 2 days ago about this up channel. So it's showing you two things. There's a pattern that shows strength in the market, and 2 days ago you got a heads up on an opportunity. So bottom of the channel from here. So we're looking at what, $1.75 on our way to 220. Cool. And that, right? And that's on a 4-hour chart. And this just shows us inside of this. This was just a little prediction that gets us to 188. Then there should be a drop retest of B, and somewhere between B and C, we go to an E on our way to 2. Okay. Now, this type, and I don't like this type of trading, so it's just the pattern. You have to realize this is not a trade signal. What this one is saying is, even if it makes a higher high, there's a pretty good potential for a down move, which of course could lead to like a head and shoulders or a reversal or something. But I would never, if I were me, sell, okay, a higher high. I would never sell here. I just wouldn't. But that's the pattern. All right, whatever, dude. I wouldn't do that. I would do that, and I would take it up, and I'd probably jam a stop and hope for that this pattern fails. Right? Remember, it's only an emerging pattern. It's not an actual pattern. It's not a trade signal. Cool. So, what did we just do? Well, I did the headline news, and we reviewed the calendar. Then we did euro dollar technical patterns, Bitcoin technical patterns, 10-year T-note technical patterns, gold technical patterns, S&P 500 technical patterns. And then we did NVIDIA, since today's a big NVIDIA day. And it took nothing at all. So if you're primarily a Forex trader, well, you would subscribe to traders.com. You'd probably put, look, I'll put all of them on. And you'd probably start your day like this. Holy smokes, eh? Yeah, there's scalps, there's spots, there's swings, there's carries, there's positions. Okay, we got them all, man. Look, 4 pages just on Forex. Now, it's silly because there's more going on here than just technical analysis, although we all know supremely important. So if I were me, I would start with the fundamentals. Okay, like our scorecards, we'll go to the main scorecard. And I'd identify things that, let's say, since we're not quite into the fourth quarter yet, we're not quite into good trading season, I would line up things that usually go up and then check the charts and see if they are. So S&P 500, good. DAX, pass. NASDAQ, pass. Dow, looks good. Bitcoin, pass. Nikkei, pass. Okay? Simple enough. And then you can flip it the other way and say, we usually sell it, pass. Pound yen, usually down a bit. Okay, you can. Kiwi Swissy, we usually sell it. Yep. 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 No. Yep. 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 So you organize all this into a list of things you might end up doing. A hit list. And it'll kind of look like what we have on our dashboard. So, should you consider buying silver today? Yeah, you can. Put that on your hit list. Remember, we haven't done pattern recognition yet. And then you're like, what about gold? Yep. What about pound CAD? Could you look to buy it today? Yep. How about euro dollar? Nope. Pound dollar? Nope. So you put these threes on the maybe list. Okay, so let's take a look at silver. So you start here and you're like, okay, I might be into buying silver today because it's seasonally normal to buy. It's technically bullish, and based on macroeconomics, the right thing to do logically. Okay, so now you go to your technical radars, and now you throw on your silver. And now you say, okay, TRADARS, show me key levels, reversal patterns, trending patterns, breakout patterns. Now, you only are interested in buying. You're only a bull. Does that look like a bullish opportunity? Pass. Does that look like a bull? Oh, wait, I'm on the wrong one. Commodities. Okay, this shows weakness, and you're like, but it's got a bullish arrow. No, that's a threat to bears. So I'd say, no, probably not good. Then I look at this one. Probably not good. Probably not good. Probably not good. Probably not good. Pass. Not good today. See? Every trade you make will be logical and intelligent. We're going to remove all randomness from your trading. So if you trade today, and I just showed you that on three different time frames measuring 8 different markets, nothing's going on, and you trade today like it's just another regular day, and you trade your favorite, Oh, I just love euro dollar. I trade it every day. You're not going to make it, son. You're drowning and you don't even know it. Oh, that sounds so terrible. Hey, guess what? 2 hours and 19 minutes. We're going to get together and I'm going to teach you how to manage the balance sheet of a commercial bank. And then next week, you're going to learn how to manage the balance sheet of a central bank and how that impacts the economy and the currency. Oh my gosh. Is this $1,000? No. Is it $100? No. Is it $25? Tell you what, you tell me what it's worth to you. It's $10 or whatever you want to pay. Bottle of beer, bottle of wine, bottle of whiskey, a super premium cigar. And you're like, really? One cigar, $100? Yeah. Hey, it takes 20 years to make it. Yeah. So anyways, thank you for being on my team. Thank you for your time and attention. This was